Okay, today we're starting a new spreadsheet. It has nothing to do with the widgets. We're starting completely from scratch. We're doing one on loan information, so you can see I've named the worksheet and entered in some entries here. So please enter that information and be sure and save this workbook. I'm going to make this wide enough for the longest entry. So let's say we're buying a car for $40,000 and we have $2,500 to put down. Interest rate, we'll say it's 3.25%. Car loans are relatively low right now in our economic situation. Number of payments is traditionally 12. Sometimes it can be twice a month, so it might be 48, or it might even be biweekly. So not biweekly, but every 2 weeks. So it could vary, but we're just going to go with one payment a month and 5 years for that loan. So all of these figures you could change for any loan you're looking at, whether it's a $10,000 car, a $5,000 personal loan for, a year, a $200,000 home loan, whatever. You put whatever figures you want in here that apply, and these bottom ones we'll put in formulas and it would work. So we want to do the payment, which is a built-in function with Excel, and it does give us down here what it wants. But if we're not sure what that means, we can come to this larger help screen, and here it tells us the rate is the interest rate per period. So that's going to be the annual interest rate divided by how many payments we had in a year, and it gives us the answer for just that portion over here. NPR is the total number of payments of the loan. So if we're going to pay 12 payments a year times 5 years, we're going to make, whoops, I wasn't done there. We're going to make 60 payments. I hit enter instead of down to the next tab. And then the current value, what amount are we borrowing from the bank? That's that $40,000 minus the $2,500. I put a minus in front of that because if I don't have that, it comes out with a positive number, and I look at what I owe the bank as a negative. So it just depends on how you want to look at it. I just want that payment to show up as a positive amount rather than the bank isn't going to pay us the $678. But technically and accounting wise, I suppose we should have left it the other way. So now the total amount paid, I paid $678 for 5 years, 12 months a year, and then I also paid that $2,500 down. So that's what I actually paid for that vehicle. The total interest I paid is the $43,000 minus the 40, or that $3,100. So now we're going to come over here and do some other information. So I'm going to enter a 1 through 5, and then I entered a 10. I'm going to take that 5 and 10 and take it over to 40. So this gives us, personal loans, car loans, maybe small business getting started, whatever type of loan, and then a 40-year loan for that house or whatever we might be purchasing. So obviously, if the loans that I get in here, I can't get over here, well, the payment would be much less, meaning they're not going to give me a 40-year loan on a car. The car is going to be dead. But this chart is going to cover most of your loans, and obviously I don't have every year in there either, but we're just trying to get some ballpark figures. For an absolute specific loan, you'd change these amounts. Now over here, I want to see what happens when that interest rate changes. So I put in 3 1/4 and 3 1/2, and then I'll bring it down to 8%. I kind of lost my little box over there with talking. But I want to come down to 8%, and after 8%, I'm going to start incrementing it by 1 full percent. Again, the 8 and 9% coming on up to we're going to go up to 24%. Up to 24%, this is what happens if you have poor loan, poor credit, no credit. You go to a pawn shop. Credit cards are often charging in this range in here. I just want you to kind of see what happens when interest rates go up, what you're paying and how that affects you. So here I want to see what would my payment be. So my payment And we always have to go by these formulas, by this information, and this table will adjust. And the one thing kind of interesting with this is that Excel really wants this to be on the same page as your data table. So now let's highlight the data table. I have that 678, which is a formula. You can't type that payment in. And now I've highlighted all my interest rates and all my years of the loan. So now I go to the Data tab, What If Analysis, Data Table, and the row is the years. The years are in a row up here, so that's where my 5, I point to that. My column, what's in the column are these interest rates, so point to this 3.25 and say okay. And so now if you look at 5 years at 3 1/4, that is that $678. I'm going to format all of this to be currency, and I do tend to go to this other currency because it's the one I like better. We're not going to we'll show the cents, 2 decimals. That's strictly a personal preference. You certainly could go to this one and it shows it more to the left. There's not a right or a wrong there. Now I want to clean up this table or make some labels to make it a little bit more clear what's going on. So comparing values. Actually, we should say comparing payments. Loan with varying interest rates and years of loan. I skipped my space in there. Gonna merge this and center it, make a bold. Then right here we'll merge these, and here's where we'll put years of loan. And this one, we need that formula in there, but to look at it, it doesn't make a lot of sense. So we're going to right click on that and go to Format Cells, go to Custom, and come up in here under Type and inside quotation. So I type the quotation mark, then I'm typing interest rate in my ending quotation, and I say OK. So that's what the user sees as interest rate, but if you look in the background, it's still pointing to B10, or that payment. So here you see, if we could get that $40,000 car at 3 1/4%, if we could get a 40-year loan on it, we'd only have to pay $139 a month. However, like I said, nobody's going to give you a 40-year loan on a car. But you do see how that payment varies tremendously as you go to more years. It goes down because you're taking more time to pay it. Or if you go the same number a year, but that interest rate increases. If we look at ours where we have the 3 1/4 interest and the loan was $678 a month at 24% interest, which I lost which column we're in, column I. That payment is almost double at your 24%, and all that additional money is simply interest that you're giving to the bank or whoever is getting this money. Now let's come down here and do a couple more ways of doing it. So I want you to type in what you see that I have typed, and then we'll go ahead and do the table. Okay, so here's that information, and I've wrapped these and merged the cells and put the headers in. These we can go ahead and type in because that is not where that formula will be. And then I copied all the interest rates from up above. Obviously, you could redo it with the drag down, and then I copied the years and transposed them. So over here it says compare payments and total interest with varying interest. So in here we're going to say what is my payment going to be? And down here I'm going to say what's that total interest that I've paid, which is this $31.80 again. That's what we need to know. And so then what we need to do up here is highlight all of this, because this is our new data table, and come up to our Data tab, What If Analysis, Data Table, and what's changing is that interest rate, and it's in a column. So we come down to the column and click on our 3.25% and say OK. And if you come down here again, look at that 3.25, that payment's correct. That's right, but now you really do get to see this is with the same number of years of the loan and same payments per year, but just that interest rate is going up. How much more you pay, and let's format that so it's easier to read. Currency, and so now you'll see that that same loan, if it went up to 8% interest, you're now paying a total of $8,000 in some interest. So the payment might not look that much worse, although it's almost $200 more. But that total interest has more than doubled. So that gets pretty high pretty quick. Then you're going to come in here and do that custom format on these two right here and make this one say payment, and this one's going to be total interest paid. So it just makes it easier for the user to see what's going on. And there you go. So I'm going to go ahead and let you finish in this last one on your own, and you can figure out that table, and I'll just quickly do mine, and I'll come back and I'll show you what the values should be, but I want to actually see that you use that table. So now you see that my table is complete over here. I've done the custom labels here, made it currency, but again, come back. Make sure you check with your information up there. Are these the same two figures I have up here? And yes, they are. So now I know I've done my table correctly. Save this one and submit it to loan information. Thank you.